How do you help investors understand some of the risks and opportunities of the different funds that are out there?
This is a good question, David. So the most important aspect is when we approach a client, we have to have a clear understanding what is their risk tolerance. If it is conservative, if it is moderate, if it is aggressive, what are their preferences for specific sectors, what are their goals in terms of returns or annual dividends versus capital gains. So it is very important to understand each client's profile to be able to advise them correctly. So this is very important. But let me say that the secret sauce of a successful investment strategy is diversification. So it allows the investments to be spread amongst different funds. This is key for a successful investment strategy.
And so how might that work? You'd pick a basket of funds essentially and allocate the required capital across a number of... How do it work practically for an investor?
Correct.
Approaching?
So you might invest in one fund, 500,000, or diversify the investment in two funds, 300 and 200, only 150, 150, 200. So this is very important to mitigate risk and choose. So there are several aspects how you can diversify. One is across multiple business sectors. Another one is regard different fund managers with different track records. Another way is to funds that are more private equity or funds that are venture capital. So traditionally venture capital funds have more risk. Of course, more risk, more profit. So another way of differentiation, of diversification, is also to choose funds that are depending on their investment strategy. Some of the funds invest exclusively in the Portuguese market. Some of the funds invest internationally. By law, 60% has to be invested in Portuguese companies, 40% can be invested outside Portugal. So there are several factors. Some of the funds distribute annual dividends. Some of the funds only capital gains at the end. So there are several aspects to take in consideration when choosing the right basket. But I would say it's always tailor-made to regarding the specific risk profile of each investor.